So, is gold a good hedge against inflation? Or is gold just a worthless rock? Here now is gold skeptic James Altucher. He's managing director at Formula Capital, and gold bull Don Luskin, chief investment officer at Trend Macro. All right, let me start with James. A worthless rock. Expand on that, please.
I mean, Larry, unlike a company like Intel, say, or Exxon or Goldman Sachs, gold doesn't actually create any value. It doesn't create any earnings, doesn't hire any, doesn't create any jobs, and doesn't produce any dividends. It really is a rock with little or no industrial use. And over time, like over the past, let's say, 130 years, it's had a very minimal return compared to the stock market.
All right, so Don Luskin, what, a non-paying worthless rock? Sounds pretty grim, but you're still buying gold, I take it.
I am, and I would invite Mr. Altucher, if he really believes this rock is so worthless, I'd be very happy to give him my home address. He can mail me as much of it as he cares to. I'll take it off his hands if it's so worthless.
I don't even have any. I have none to mail you. I have none to mail to you.
Well, we have a gold chart. We're going to put up a longer-term gold chart. Doesn't go back centuries, but it does go back to the middle 1970s. Don Luskin, is gold a hedge against the fear of inflation? Is gold a hedge just against fear in general? Maybe bad policies, taxes, regulations. I don't know. There's so much pessimism around. I mean, Don, what's your basic bullish case on gold? And then we'll let James respond.
Right. Well, I don't believe that gold is, as James calls it, a fear metal. I believe that all you have to do is look at the data and you'll learn that. Look what happened as the credit crisis, the banking crisis that practically brought down the whole world in 2008 unfolded. From a high, then an all-time high, just above 1,000 on Bear Stearns Monday, gold got into the high 600s after Lehman Brothers and AIG went down. So as the world was ending, gold didn't go up because of that paroxysm of fear. It went down. What makes gold go up is the fear of inflation. And the fact that gold has recently made all-time highs is actually a good thing, because it means that from those depths of late 2008, where we were facing deflation, the Fed has successfully turned expectations around, and the gold market, the most inflation-sensitive market in the world, expects inflation now, not deflation. So gold has moved, is up 76% from its lows in late 2008. So
let me go back to James.
The thing to look. Go ahead.
No, I just want to, just on that particular point, James, do you see the inflation threat that Don sees? I mean, mindful, gold has gone up fourfold in about the last 10 years, and it has outperformed stocks and a whole lot of other asset categories. James, what is your inflation outlook? Are the central banks printing too much money, or are you willing to overlook that in favor of some other investment to hedge?
Well, first off, gold has never really been an inflation hedge. If you look back, let's call it 40 years since the 60s, the actual correlation between gold and the CPI has been about 0.14, which means basically there's no relationship between gold and inflation. And you look at this past decade, gold's gone up significantly, and inflation's barely been a factor. So, and right now, if anything, we're in I'm more worried about deflation. We're seeing the CPI at its lowest level in about 50 years. So I don't see any connection at all between gold and inflation. Right now, why is gold up? We had an oil crisis. We had the sovereign debt contagion. Whenever you have words like contagion or crisis in the headlines, gold's going to go up because people get afraid.
Why not 2008 then?
Okay, that's a great question. The reason is there was no cash to buy gold. We didn't have the fear of a crisis then. We actually had a crisis. We had a complete liquidity crisis. There was no cash. Everything essentially went into the dollar. Everybody pulled back out of every single asset class. Gold is an asset class. People go into it when they're afraid of other asset classes.
Well, all right, Don, gold versus inflation. James makes some tough points. Most people associate gold as an inflation hedge because gold tends to keep its value in the long run. Whether it can hold this high level remains to be seen. Do you disagree with him that gold is not an inflation hedge?
Well, I'd love it if he'd email me the spreadsheet that shows a correlation between gold and inflation of only 1.4%. I'm sure you can torture the data to get to tell you whatever you want.
There's no torture. It's just a straightforward correlation of the price data.
Yeah, but guys, let's not get too deep on the correlation. My point is this. If the Federal Reserve keeps a zero interest rate, I don't know, for another year perhaps, if the European Central Bank keeps its own 1% interest rate, if Japan keeps a near zero, James Altucher, doesn't that promote gold? I mean, the leading central banks. No? You're saying no?
The best inflation hedge is the U.S. stock market. Here we are, trading at the lowest PE ratios versus interest rates in about 50 years, and 40% of the S&P 500's earnings are abroad. So these companies will do well on a weak dollar. It's a total inflation hedge right now, the U.S. stock market.
James. Let's just go back to the worst inflation America's seen during our lifetimes, the inflation of the 70s, where the CPI basically doubled between 1972 and 1980, and stocks only went up about 30%. Gold went up 800%.
Exactly.
What do you want?
Okay, but the stock market has changed significantly since the 70s. Only about 10% of the S&P's earnings came from abroad in the 70s. Now it's it's 4 times as much. The earnings that come from abroad.
What does that have to do with it? Because we have inflation going on all over the world.
If your earnings come from other countries,
interest rates are
you'll
functionally
benefit from a
zero in
weaker
every
dollar.
major economy.
Hang on, one at a time. Don, what's the next move in gold, in your judgment? It's hovering just south of $1,200 an ounce. What's the next move?
I think that by the time a year is out, I think gold will have certainly touched $1,500. There are so many fears of a double-dip recession out there. There is basically no choice but for Ben Bernanke to let it be known that the Fed is going to stay at zero interest rates, not just for an extended period, but for an extended period, and probably start inventing other ways to start doing different kinds of quantitative easing. It just ain't working. With an election coming up, having a 9.75% unemployment rate is not acceptable, and we are going to inflate our way out of it, and gold is going to react to that. There's just no question about that.
And James, let me ask you, you're going to give me the bear case. I just want to add one more ingredient we haven't talked about, and that is the potential fiscal bankruptcy of, let's say, Europe. This is Greece gone wild, and the United States. We're going to talk later in the show about some budget balancing plans and so forth. But James, I thought some of the rise in gold, at least some in the last year, was a function of massive spending, massive borrowing, and massive deficits, really by all the Western countries and by Japan. Do you discount the fiscal malaise, the fiscal bankruptcy, the Greece story writ large? Is that off your radar screen?
No, it isn't. But I do think gold has risen out of fear that that contagion will spread to the U.S., to other countries. But I do think that the $1 trillion that Europe and the IMF has basically said, we're going to use this trillion to, satisfy this problem, has kind of calmed concerns, at least in the past few weeks or the past month or so. I think that's why you're starting to see gold come down now. People aren't as afraid. And I think as a result, if there is more reinflating that happens, I think stocks, U.S. stocks in particular, are going to be the ones that go up.
All right, and so your next move for gold, Don has 1,500. Where are you, James?
I would say somewhere between 800 and 1,000, but I do think, regardless, stocks will outperform gold.
All right, gentlemen, we're going to leave it there. James Altucher and Don Luskin. That's a great debate. I appreciate it very much.
Thanks.
Highbrow, high ground.